The Perth property market, it's boomed. Is it still booming? And if it's not the place to buy, where is the next target? Guys, stick around because in today's video, we're going to unpack that and go into a much deeper level. Welcome back to the channel. My name is Julian. I'm the head of strategy here at Ripehouse Advisory. And if you're new to the channel, here we talk about property, finance, and all things related property. If you haven't already, make sure you smash that like button and subscribe. I'm going to go into more about the Perth video today. But I guess I want to have a bit of a review of Perth. You know, it's no secret it's been a real investor hotspot, probably more so in the last 2 years than going back, say, 10, 15. Obviously, it's had its well-known crash or sleepy period during that mining collapse. But I guess for us here at Ripehouse, we were, I want to say, we're probably one of the first adopters into the Perth market. We actually made our first purchase in Perth in December 2020. And I guess, working with clients directly, it wasn't always something that everybody was as open to invest in Perth. There was a lot of negative stigmatism in terms of getting involved in the Perth market because of concerns of mining and being a one economy town, and obviously it's absolutely updated and evolved over time, and I guess the results are now in the pudding. And in terms of how many purchases, since that first initial purchase, we've purchased over 250 properties in the Perth market alone, and that's still only making up a portion of our total buys, but it has made a significant portion. And probably the number one LGA we actually targeted in that area is the LGA of Rockingham. So that's kind of goes down, and you got Rockingham, Waikiki, Warnbro, Secret Harbour, Singleton. It's quite a large catchment area. But if we have a look, just I guess in Perth as a whole over the last 12 months to begin with. So in the last 12 months, crazily, Perth's actually achieved 24% capital growth in the last 12 months alone, which is mind-blowing, really. But we are starting to see it's I think maybe in the last fortnight or so, this is data from SQM, it's actually had a bit of a pullback. Now that could be that 1 week sometimes, or fortnight can just be a little bit of a spike because of football or public holidays or all those kind of things, but it is starting to slow down. You're not going to continue to see a 25% year and a 25% year. The other thing which is slowing down in the Perth market as well is rental movement. So rental movement over the last 12 months is around 10%. If we went back 12 months ago, the rental movement was actually about 20% in the market of Perth. And I guess signs of when you're in a crazy hot market, one of those indicators is days on market. So if we take a bit of a look here, we look at days on market. So for those of you who aren't aware of what days on market actually is, it's essentially how long your property sits on the market and takes to sell. And typically speaking, if your property is going on the market and it's selling in a very short time frame, you're probably getting a premium price because you've got multiple buyers coming in. If it's taking a longer extended period, which you might find in certain pockets of Victoria at the moment, you might not get a premium price. You might have to make some adjustments on your price expectation. But we can see here the trend of Rockingham, it's sitting at 9 days, so just over a week, goes up, gets listed on the Wednesday, probably sold that weekend. And sometimes this data is actually not really fully correct because it's really relying on the agent to mark it as sold, and they're going to get through those offers and close it. But basically, once it goes up, it's sold straight away. So that's normally kind of an indicator of a silly market where you're not necessarily at your peak, but it's not really in a buying window anymore. There will be the odd opportunity here or there to buy a property, but I guess in the Perth market, I guess for us here at Ripehouse, we mentioned we purchased the first one in December 2020. We're not really interested in, if you think about property investing as a roller coaster ride, you don't really want to jump on the roller coaster halfway through or 2/3 of the way through the journey. You want to get in, enjoy the full experience. So I think in general, that Perth market is going to slow down, and some kind of indicators that are showing that is property prices are going to start, and they're already starting to slowly pull back. The rental prices are starting to slow down in that growth rate. Vacancy rates are also starting to increase just a little bit. Nothing to be concerned of if you're already holding property in Perth. But the reason for that is, builders and developers, they're great at sniffing an opportunity, and are all cashing in on this hot market, right? They've snapped up or snapping up vacant land over there, developing it now, because it wouldn't have been profitable when we very first purchased property in Rockingham, as an example. The median price there was just a tad under $360,000, where now it's about $650,000. So we're talking about over an 80% jump in that period. So if you've got properties that are selling for 350, 400, 450, for a developer, it's really hard for them to turn profit. But now, as these properties in Perth are getting the 6s, the 7s, the 8s, the 9s, there's new stock coming through because they're starting to be able to make a profit, right? So you're going to start to see that tightening loosen a little bit because those opportunities are opening. Also, unfortunately for them, but this will be a lesson learned for some investors. There's NDIS, share homes, all these kind of get rich quick cash flow schemes that are going to drip feed into that market as well. So I guess in general, Perth has been a fantastic buying opportunity. The fundamentals are really strong in Perth. I think it's got the best positioned government in terms of surplus and cash, population growth. But again, we're past that kind of boom. Still going to be a bit of a growth spurt, but again, wouldn't be an area that I'd continue to buy too much, except for the other opportunity. And I guess the other main reason for that is when you are going through and you're trying to buy, you're trying to buy well, right? You don't want to pay overs to get into a market, because if you like a property, it's going for $750, you've had to pay $800, $850 to get in. Well, essentially, you might have just paid for your growth then. And it's not really what we want to do as investors. We want to make unemotional based decisions. We want to buy wherever the best opportunity is. So getting into, I guess, why you might have clicked on the video as well, like where is the next target if Perth isn't the point of focus? So for us as a business now, I guess it's no secret for anyone who's been following along, whether you've been watching some of the videos, you've been attending the mastermind sessions that we do with our clients, regional Victoria is a really big focus for us. One big focus for us is the local government area of the Latrobe Valley. So that's to the east of Melbourne CBD, about 2 hours out. Quite a vast area as well in terms of land size. So these are all the suburbs that cover in the Latrobe Valley, but it's not necessarily that we're buying in all of those suburbs, but it just gives you, I guess, kind of a map where we're kind of trying to target. And I guess to break down the why, because that's for most investors why, and this was a harder thing for people to understand in the Perth market. Why are we going into Perth? It's gone through all these negative things with the mining sector, collapses, etc. I mean, at the end of the day, and the proof's been in the pudding as well in the property space over the last couple of years, affordability continues to win. You've got people who are losing serviceability, cash flow issues, and that's even with a rate cut here or there. It's not like it's going to go back to where we were at 2 or 3% rates. So affordability continues to win. And if we talk about the area of Latrobe, you're still seeing opportunities in that kind of $350 all the way up to the $600,000 price point. And they're the areas that, as of in the last couple of years, have been performing the strongest. So if we're talking about affordability, good entry points, that really wins. You're also starting to see this chasing of value. So I think it's understanding of what value is. There's perception of value, right? So if we have a look where most investors have poured their money in over the last 2 to 3 years, it's been in the Perth market and it's been in the Brisbane market. And if we went back 10 to 15 years, those markets have been poor because the reality is people didn't really perceive value in those locations. Whereas time went on, Melbourne and Sydney became unaffordable. It wasn't affordable either from a serviceability standpoint or the pricing figure of those properties. You didn't have the ability to buy $1 million property, cash flow issues potentially. So you saw places like Perth, like in areas of Logan or Ipswich, where you were able to buy really well presented 3 or 4 bedroom family homes, freestanding, price points in that kind of $350,000 to $500,000 price point, presented well. They were great buys. So, and they also presented strong yields. A lot of the yields that when we entered the Perth market, a lot of the yields were very close to 5.5% to sometimes they were going up to the 7%. Now, what has happened since then is they've dried up those opportunities now. Like if a client was to come to us today and say, hey, I want to get into the the Perth market, I should say, we need to see at least a kind of 750 price point in terms of just entering in there. So that's number one, where at the moment the value is more in that regional Victoria market because you can get those kind of opportunities that are there. The yields in those markets are strong, kind of 4.5% is the low end, but they can be going into the mid fives. And I guess good long-term performance also exists in these markets. So it's not really like a Perth market which has gone through a bubble crash. If we look at the last 10 years, it's still achieved 6.6% growth. Now, taking into account that Melbourne in general over that period of time has performed quite poorly, that's a really strong, consistent performer. It's always been an opportunity for, I guess, investors have always piled into regional Victoria in certain locations, and it's normal that you'll see them come in for 3, 5, 7 years, take their money, go into another market. The same thing will apply to places like Perth and like Brisbane, because people are going to take their growth and they might want to pay down debt, they might want to set up for retirement, they might, whatever it might be. It's again chasing that perception of value. So that's a really big one for us. We do see that affordability, that perception of value being very, very strong in the area of Latrobe. And I guess the indicators for us is when is something in a good buying window. So I guess firstly and most importantly, it needs to have good fundamentals. So good fundamentals look like a writing. Do we have population growth? Tick. Do we have good access to utilities? We're talking schools, shopping centres, public transport. That's a tick. Do we have the other fundamentals? So we like to see, it's not just about having fundamentals in place. We need to see when is the time to enter a market. So do we see tightening of vacancy rates? So yes, absolutely, that's happening in Victoria. Victoria's a little bit lagged in terms of what's happened in other states because long lockdowns, you started to see vacancy rates blow out. Now that they've played catch up, vacancy rates in Victoria are quite tight across the board, and that is then essentially leading into supply constraints. Not a lot of properties to buy, not a lot of properties to rent, and that increases your rents. The other thing is what's currently existing in those markets, which aren't really available to you in the Perth market, is that strong power of buying well, getting that discounting at price. If your property is selling within 9 days or less, I can guarantee you the agent isn't coming back to you to talk about, are you still in there? Are you interested? Do you want to submit an offer? When you've got properties that are sitting on the market a little bit longer and you're the only offer on the table, your ability to apply your leverage is a lot stronger. So being able to buy well or not pay overs is a good sign as well. And the new builds aren't always a threat. So, I mean, when we were buying heavily in Perth, there were still areas that had, supply opportunities. So if we go to the north, you had places like Alkimos. You went back down to the south, you had places like certain pockets of Aldivus. It's understanding what your new supply threats are. Now, in some of these locations in Latrobe, you might be able to secure properties that are $300,000, $400,000, $500,000. But if the new builds down the road are on smaller parcels of land and they're going to cost $600,000, $700,000, $800,000 to build, are they a threat or are they actually adding to your perceived value on the property that you're able to walk in through? So I guess that for us is all big ticks, and this is something we've been doing since 2015, advising people where to buy, what to buy, and when to buy it. So track records, there's not just Perth that we got right, we've got plenty of areas in history of buying well. So we're very, very, pro Latrobe Valley at the moment. But there are some threats that you do need to take into account. So there are some gotchas in these locations. So flooding, not too much, but there are some flood zones in the area of Latrobe that you need to be wary of. And some of them, having a look at the overlays, could be smack bang in the middle of the town. So you do need to be wary of the flood zone. Bushfires are a real threat. And I guess another one this is common sense, but public housing dense zones, when you're buying more affordable price points, of course you're going to get into lower socio pockets, and when there's lower socio pockets, you have to anticipate that there's going to be more public housing. So there are some pockets where they have very, very dense public housing sectors, And that can be okay. You can still make profit in those locations where there's public housing, but I guess for us as a fundamental in terms of what we do as a business, we want to make sure that when we're advising clients where we should be buying property, we want to make sure we're attracting the best quality tenants in that location at any one time. The last thing you want to be worrying about is your tenant paying their bills? Is your tenant taking care of their place? Is there fights out the front, neighbor disputes, etc.? So trying to avoid those zones are going to help you a bit. And you do need to be very, very cautious in these areas. And there are some pockets, so we talked about the supply threats aren't a big deal, but there are also some pockets where the supply threats are close to the pricing point. So you've just got to really pick and choose and make sure you're really aware and do your research at a really high level. And if you're not confident in doing that groundwork, you're more than welcome to click the link below and pick up a call with myself or the team, and we can just have a general conversation and see where you're at with the investing side of things as well. But guys, I hope you found this video informative. I'm really looking forward to some of the comment trolls out there that'll jump in and talk about land tax in Victoria, property management fees, insurances, council rates much cheaper in Victoria if you can buy well. I'm happy to pay $1,000 a year in land tax or whatever it might be if that means I can if I was able to get an 80% return on my investment over a few years like we were able to achieve in Rockingham, I'll pay $1,000, $2,000 each and every year. It doesn't mean anything to me, but make sure if you haven't already, smash that like button, leave a comment. It'd be great to get your thoughts on this, and we'll catch you guys in the next one. Bye for now.